Welcome to HYCM Insight with myself, Giles Cochran. Now, the market move for this session ahead is as follows. This week does see the Reserve Bank of Australia meeting. Now, the base case is that the RBA will not raise interest rates until 2024. That is, despite the last inflation reading, moving back up into the RBA's 2 to 3% target. So the meeting tomorrow will be in key focus. Will the RBA maintain their dovish focus? Or will they give the Australian dollar, New Zealand dollar reason to rally? Now look at this very interesting seasonal pattern that exists between the Australian dollar and the New Zealand dollar between the 4th of November and the 19th of December. Over the last 10 years, the Aussie-New Zealand dollar pair has fallen 9 times between November the 4th and December the 19th. Average loss has been minus 2.12%. Largest gain was 0.23% here in 2011. Largest loss minus 6.07% in 2014. Now, there's never any guarantee that this seasonal pattern will repeat again this year. But it is very helpful to notice when these strong seasonal patterns are in place. The main risk to this seasonal pattern outlook would be if the Reserve Bank of Australia take more of a hawkish outlook and that brings forward interest rates from 2024. It's just worth looking at the Aussie New Zealand dollar currency pair. We can see the bond yield spread between the Aussie and New Zealand 10 years have been drifting lower, taking a little bit of an uptick today on some bond news out of Australia that some bonds purchases weren't made by the RBA. So that just put the 10-year yields up a little bit higher, but the bond yield spread rather just moved it up a little bit higher. So just watch this. That's the 100, 200 exponential moving average. If we do get a very bearish Reserve Bank of Australia and they maintain no interest rates hike till 2024 and the employment data is strong for New Zealand, then that could encourage more downside in the Aussie-New Zealand dollar pair. A lot of risks obviously with this outlook, but it is just helpful to see that strong seasonal pattern as it could potentially be a good catalyst for further selling if the Reserve Bank of Australia and the RBNZ employment data point both move things in the right direction.